So this is going to be a quick one today because the Paramount earnings were a little misleading, and I think a lot of people took away the wrong thing. Paramount didn't quite hit the targets they were aiming for, but at the same time, they're going to save an extra $1 billion by having a merger in the first place. It's kind of a nuanced story, but it's well worth the time to take to understand and appreciate what's going to be happening if Paramount is successful in acquiring Warner Brothers, because it'll be about the same thing. And with that, here we go. Now, before we get started, just a real quick reminder, I am trying to get to 50K. I can do that with your help. So let me ask you right now, please double check you're still subscribed to the channel. If not, if this is your first time here or your 1000th, please subscribe right now. Turn on the notification bell and select all notifications. Then hit the thumbs up button right down there. And we can, well, call it a good day, because at the end of the video, I've got an opportunity for you to comment and let me know your thoughts about Paramount and their merger. But Deadline had their thoughts. And this is from Dade Hayes, who actually does understand the business quite well, and explains here that Paramount Q3 revenue misses Wall Street target, but the company boosts Skydance merger savings outlook to $3 billion. That's an extra billion on top of what they were thinking before. Now, that doesn't sound like a big deal as a headline, but it really is. It's an awful lot of money, and that's the biggest takeaway from, or at least what I think is the biggest takeaway from what yesterday's earnings were. We'll look at more in the story and talk about that, but this is another way to look at opportunities in the future for these large media mergers. There are ways that eliminating redundancies can create for yourself an awful lot of savings and even more opportunity. So, from the story, Paramount's third quarter revenue fell shy of Wall Street analysts' consensus forecasts, but the company issued a rosy 2026 projections and upped its target for cost savings from the Skydance merger. Revenue for the period from July to September totaled $6.7 billion, while analysts were expecting $7 billion, so a small miss. But the current management team and corporate iteration of Paramount dates only to August 7th, which is when Skydance merger closed. So the company issued guidance for 2026 revenue and operating income before depreciation and amortization. Its projects total revenue of $30 billion, driven by a healthy acceleration of streaming revenue, as well as global profitability. CEO David Ellison wrote in a letter to shareholders with the EBITDA hitting $3.5 billion on an adjusted basis. Now, let's talk about what the future holds for this company, because I think that's where a lot of this story is not being clarified. Cost savings from the Skydance merger, initially pegged at about $2 billion, will now reach $3 billion. That's a lot of savings, and it will make the bottom line look even better as we enter 2026. Advertising revenue has continued to decline, but that's declining for everybody. It slipped 12% to $1.4 billion, one of the main causes of overall net losses of $257 million, which again makes a lot of sense. This is newly honed, and I'm sure they'll do more honing and sharpening of all of these numbers over the course of the next 3 months. The earnings report is the first by the company following the August close of the merger of Paramount and Skydance. After a long and torturous regulatory process, they did get quite a bit of scrutiny, and again, often focused on the current administration, which I'm not really sure was the major hangup there. Ellison and other senior executives were scheduled to speak to Wall Street analysts on a conference call shortly after the release of the numbers. Investors cheered the earnings results, sending shares up 3% in after-hours trading, because they did an end-of-the-day earnings report, not a beginning, like Disney's been doing. This has ended weeks of sluggishness as the stock pulled well back from its high north of $20. They finished the regular trading day at $15.25, up 1%, probably on rumors that these numbers were real and they were going to be very good. Overall, this is a good sign for Paramount. It's a step forward in the right direction. Perhaps other entities will take note and try to follow along. Try to present things in a more fair and balanced way, or in other words, pull a Paramount or an Ellison, or however you want to state that. I project forward that if Paramount happens to be the one to win the bidding war for Warner Brothers Discovery, I have a feeling that it'll have a quicker process than a lot of people are speculating. Some people suggest that another mega merger might be shunned by the federal government for a lot of regulatory reasons. And I don't agree. And I've said my reasons why, but I'll just tell you, listen to Valiant Renegade and many others, and you'll kind of get the feeling that there are a lot of people rooting for that outcome. I am specifically. I am going to be talking with WW Pro later today, along with Jonas J. Campbell, on this particular set of numbers and what the expectations are for whether it's Comcast, Netflix, or Paramount that ends up with Warner Brothers. I'm rooting for Paramount. How about you? Do you think that kind of a merger is likely to succeed since there don't seem to be a whole lot of network implications? Do you think that maybe the monopolistic practices is the thing that's going to stymie them? Or do you feel like perhaps without a whole lot of hesitation, the federal government will say, good, at least we know you're going to start covering information and politics in a fair and balanced way? Be an interesting question to get your answer to. Let me know your thoughts in the comments section down below. One thing we all can certainly count on is that there are going to be a lot more layoffs in the future. I know there was definitely a conversation about limiting it to one big major occurrence, but I have to say I think it'll happen even more so than we were even expecting and, well, what they seem to have expected as well. Lots of major gains for the company. Oracle co-founder Larry Ellison and private equity backer Redbird Capital have also contributed to the conversation around some of the major buys over at Paramount, including a $7.7 billion for UFC rights and a reported $150 million for Barry Weiss's The Free Press. The latter deal also involved Weiss, a former newspaper op-ed columnist and editor with no broadcast TV experience. Notice how they throw that in, to throw shade at a very successful young woman who has done basically everything in media, less, this accusation of no broadcast TV experience. Who cares? Taking on the role of editor-in-chief of CBS News and doing a darn fine job of it. So fine, I will comment, that she actually chased out a bunch of riffraff, which I think ultimately will benefit Paramount down the road. Hopefully she gets a chance to restructure 60 Minutes and clean out all the activists that seem to be residing in that location, along with other news locations that they can ill afford to have throw shade at the rest of the company, which is kind of what activists do. On that note, we know for sure that the Ellison family has their eyes set on Warner Brothers Discovery and are waiting to yield those rewards. Will they get there? I don't know. Again, let me know your thoughts in the comments section down below. And as always, be sure to take care of yourself, take care of others, and until next time, see ya! Probably watching Paramount Plus, believe it or not.